So guys, what's happening? Welcome back to the channel. It's been a while since I've done one of these technical analysis breakdowns. Between myself and Nathan, we do like to share our ideas for the Pip Chasers episodes. By all means, it's great that myself and Nathan do individual videos at the same time. It kind of shows you the different types of trading. We always want to bring the trading from my perspective, from Nathan's perspective, because ultimately the trading is an independent thing. And it's good to explore ideas or different methods and see how different traders trade. But ultimately, it's all down to your independent work within the charts and understanding it in your own way. Okay, guys, and also please do not hesitate to visit our website, rebirthaudience.co.uk. Gives you a bit more of insight about ourselves and how we like to trade the markets, but ultimately we're here to help. We're here to help you get into the financial markets safely, but mostly importantly, effectively and profitable. Obviously, we're here to earn a living from anywhere we desire. I love the thought of traveling. Everyone has their own goals and inspirations, but ultimately it gives you that flexibility in regards to earning from where you desire. Ultimately, guys, view our courses, things that we can do for you. Hope you're ready. As you know, we do our Forex 2-day courses. But ultimately as well, guys, we've got the Forex care packages available to you guys as well. So just in a nutshell, please do visit the website for the full details. Everything that you would get from a day-to-day course with myself in the office, we have it all online as well. So we have each chapter broke down into different videos, different technical analysis videos for you guys to go along as if you're in the classroom as well. Great for the international students, great for students at home, great for those guys that perhaps just want to do it as you go along sporadically, one bit at a time. If you do learn in a different way of not having all the information influxed at one time, by all means, you have it all on a platform provided from ourselves for you guys to learn from. So it's great to perhaps see with our episodes that myself and Nathan, first thing, we do trade different currency pairs at time. So it's always great to perhaps look at other charts that perhaps you may be able to gain a relationship from. When I say relationship, be able to be profitable from it, know how that trade works. But ultimately, there's multiple of currencies out there that you could perhaps trade and still be profitable. So in this episode, I'm just going to break down simply what I'm looking at next week. So this is where on a Sunday, as you know, I'll do my setup Sundays. So literally I'll break down what's happened in the past week or so, and then perhaps do a bit of back testing, see what's gone on in the past, if we've come to any key levels, work through my confidence chapters. For those that have done the Forex course, you'd know the 7-8 chapters I'm talking about. So ultimately, once again, I keep emphasizing to any student that I know, don't enter the market simply without understanding how technical analysis works. You'll be kicking yourself. You'll be kicking yourself thinking, why the hell did I not take 2 days just to sit down and think about how I should be trading and how it can be made profitable? Some guys do signals. You gotta think to yourself, where are these signals coming from? They're coming from the charts. Why don't you just be your own signal provider? So it's always great when you get into trading, be the master of your own trade, excuse the pun. Don't rely on anyone else. Get an education, get an understanding, just like anything. We go to school, we go to college, we go to university. Why are those steps in place for you to be the most successful in whatever industry you're doing? Same applies to the charts. So looking at a few currency pairs across the top, talk you through a few of my setup ideas. Firstly, looking at USD JPY. Now, for me, being a day trader, so I take intraday trader. So I like to take money out of the markets every day, every 24 hours, every 12 hours, catching those bull runs, catching those bear runs. Don't necessarily hold my positions like a swing trader would. Let's look at the chart, how it looked 2 weeks ago. So this is the weekly time frame now. If we, as you can see, I've got my ascending channel, my outer trend line and my inner trend line across the bottom there. So that's my 0.1, my 0.2, extended it off to my 0.3. Then I've made a new 0.1 to a new 0.2 with an inner trend line just to get more recent price action, see some key levels along there. But ultimately, if I just go into what happened, when I say 2 weeks ago, obviously today's the 21st of April, I'm looking at the candle that happened on the 8th of April, the weekly closure. So as you can see here, guys, we could say it's a clear great hammer, possibly indicating more upside momentum. However, when you see it's a bit more evident on lower time frames, we kind of hit a key psychological resistance level at 112. So for I'd say rookie traders, for inexperienced traders, you'd be looking for closure above that 112. As you can see, we closed at 112 bang on. We'd want to be seeing a good significant sort of break above 112 for me to say that that next indicating week we will continue that succession, perhaps to the 130 and 500s. If you look at what's happened in the past week, okay, we've had a doji. So literally, a doji simply indicates to ourselves indecisiveness in the market. The price doesn't know what it wants to do with itself yet. Now, if you used to step down to the daily time frame, you'd have perhaps got an understanding of why, from seeing that hammer on the Sunday night on the weekly time frame, perhaps on a daily basis, we wasn't looking to enter to the upside anytime soon. Okay, guys, now stepping down to my daily time frame. Okay, guys, now stepping down to my daily time frame, if I was to zoom in and look at where that hammer was formed on that previous Friday, it would have been this massive spinning top bullish candle here. Now, as we can see, looking back, just going back to the 4th of March, same sort of resistance that we've kept and held at. We didn't have that candle close above my purple dynamic zone, which is my daily key level, indicating that perhaps before we see any more bullish momentum, we may have a slowdown, or perhaps we may need to perhaps close above it for it to be validated for the start of that week. So going into the week, guys, we've then had a succession of dojis across 3 consecutive. So as an intraday trader, you wouldn't necessarily want to be in the chart. When I say that is because dojis simply indicate indecisiveness in the market. So why is it indecisive? Why are we getting dojis formed at this price of 112? Well, 112 is a great psychological key level. The market's just full of millions of traders, millions of human beings. So when human beings see psychological key levels, whole round numbers on the charts like 112, 111, 110, they also act as a dynamic key level of resistance or support. So putting a bit of logic to it, try not to overcomplicate trading, but when it comes to psychological levels, it's just due to the fact of natural human being instinct to hold or sell or buy a price, or buy a chart, I should say, to a specific price. Now, if we was to look back at this 112 key level, I'm just going to also put a little horizontal line across here. I'm just going to change that color so it doesn't get confused with our weekly. Okay, great. As we can see across there, guys, 112, it's a major level of support and resistance. The reason why I say support and resistance, it's a resistance as it can't break through the ceiling to the upside, and it's a support when we swing low, it supports the price before it swings back up and eventually breaks through to kind of create that resistance level here. So you can also call this ceilings and floors. So with a bit of back testing, guys, with back testing, you'll be able to look back at price and you can see what the price has done if it's tested certain key levels, or what happened at those certain key levels for you to kind of get the bias. So I knew once we got back to this 112 zone, we could perhaps see a slowdown before eventually breaking through. So if I was to go back to my weekly, guys, I did have a moving average cross 2 weeks ago. Eventually the charts may want to sway back up, creating these all-time highs again in the 114s. However, that was from a weekly perspective, but on a daily perspective, we have had this 112 daily key level hold up quite significantly. Another confluence that I could perhaps use is a double top. So you've got a perfect M formation on the chart. Whenever we see an M formation form here, let me just point it out. This also shows perhaps a rejection of a key level and perhaps a movement back to the downside. So we've had a swing, creating a swing high as we would. Then we've had the middle part, we've had a swing low, but then we haven't created another swing high necessarily because, well, we have, but it's not a higher high. It hasn't closed up here before rejecting the price. It's met the same levels or equal to. Whenever we see this M form, also a great sign of indication to perhaps see a bearish pullback. Now, looking at the last 2 days of the week, we've had this hanging man here. As we know, a hanging man at the end of an upwards trend does show signs of bearish momentum. We also had it followed by a spinning top. Not much activity on this Friday due to the bank holiday. That's another thing that's for traders to understand. If you are holding positions over bank holidays, be patient. As you can imagine, this is a game where the charts move due to millions of individuals and investment companies and hedge funds and banks all pushing money into the market. Now, if people aren't in the charts pushing money into the market because they're on holiday, expect to slow down in chart time. So put a bit of logic to it. Don't overthink trading. Individuals with a lot of buying power and a lot of selling power, manipulating and moving the market in specific directions. Okay. Now, as you can see, guys, I am looking for a rejection of this zone. The reason how I know that perhaps we could see a rejection if we go down to one lower time frames, like the 8 hour, I've got a built up section of consolidation. So I've had that swing high, I've had that swing low. For example, if you're using Fibonacci, you could create a point A to a point B here. And as you can see, we've been rejected at the back at point B, for example, here. And then we've created that consolidation where price is rising across moving averages. So any sort of intelligent swing trader would perhaps look to close off their long trades from here. But then we have certain individuals that get greedy and start to not look at the charts anymore and look at the pips, which is always what we're after, looking at the pips, but not necessarily indicating to them that perhaps we're 30 pips short between where the price is now to where my target was, cutting their losses and perhaps taking a good 80% of their profits out of the market. Now, let me just get rid of that. From here, I would be looking for some more closures underneath this trend line, breaking through a trend line on the fourth trend line touch, and then perhaps seeing point C or point B getting met in the future. Now, what I'd be looking to see from all this consolidation, as we know, the charts move in three ways. So we can move in an upwards trend, move in a sideways trend, and then we can move in a downwards trend. So now we can see that we've had a succession of an upwards trend in this shorter period here. Sideways movement, I am looking for a break of this trend line on the fourth trend line touch, horizontal lines here. So this would be a great target for myself around the 111, 110, 900 zone. Myself as a day trader, I'd perhaps be looking for one of these first targets before seeing an all-time daily trend line being hit perhaps to the downside here. As I said, I've taken it step by step for myself, seeing what targets and resistance zones I can break through. But as an intraday trader, I like to take money out of the market. So that was looking at USD/JPY. I'm going to quickly talk to you about GBP/USD, so the pound. As you can see, since I think start of March, we've been moving, consolidating within a descending pennant. Now, pennants always show confusion and indecisiveness in the market. Brexit. So in the real world, when the economy of a country is in confusion, something's due to happen, something's not going to happen, no one really knows, it then reflects in regards to the charts and shows the confusion in a charting technical way, which is hence is a pennant. So when I say pennant here, guys, we've got the swing, we're getting lower each time we swing, we're getting lower each time we swing, and I've got a counter trend line as the chart, the pound from December last year has been moving in an upward channel. So we're creating swing highs, but now the swings are not getting higher each time. They're consolidating, creating lower swings. Now, to myself, what would I be looking for on this chart? Now Brexit's being pushed back to October, we may start to see some nice clear swings in directions now. So for myself, from back testing, I'm looking back at previous price. I know psychologically the price of $1.30 to the pound is a clear, concise, psychological key level for this pair. Now, I've looked in the past, back testing, if we was to have a closure underneath 130, we're perhaps going to be looking towards my weekly key level and seeing signs of 127 against the US dollar to the pound. But ultimately, I do feel like the pound's going to hold its strength. As you can see, we've had price touch, but didn't close underneath a weekly resistance as well. And we've had a dragonfly doji to show indecisiveness in this market at the minute. So what could this also be? 1, 2. I've ignored this trend, this little wick here, due to it being the Apple's stock fundamental that came out, which impacted quite a lot of currency pairs. So I've started my point from A, B, C, and then I've had a fourth trend line touch. But then you could perhaps see a clear false breakout, possibly inbounding with this doji indecisiveness, obviously reacting off a strong barrier of support. So if we was to perhaps, I'll be waiting for signals, for example, the signs of a morning star, a hammer formation in regards to the candle. These are good candles to kind of get in your vocabulary, just to understand, because they do have clear significance. If we can see some sort of pushback above this EMA here from some bullish shine candles, I would be looking to enter. Let me just remove that. I'll be looking to move back into the upside, perhaps meeting up with certain key levels that I've got on my chart already. So you've got that psychological level of 132,600 inbound. So it all depends on what the chart does next for this pair. As you can see, if I step down to the 8-hour time frame, we're now just working within the mother candle. We are consolidating. As you can see, we have clear rejections off 130, massive rejections off 130. So 130 is this dotted pink line I've got here. But as you can see, we're testing it and we're kind of ranging within the 130 and the 129.7 at the minute. So pivotal time for the pound at the minute. I do think it can hold its strength and then perhaps see some bullish signs to the upside. But don't enter on it yet, as we're still consolidating. There's going to be more opportunities in the market before taking a less certified trade due to not having that signal yet. That's one thing that can hit traders. You can be great analysts, APY guys, so the Canadian dollar against the Japanese yen. So new currency pair I've picked up this year, but I am currently working on this pair quite heavily due to, okay guys. Okay, so now looking at the next pair. Okay, now looking at my next pair, which is the Canadian against the Japanese yen. It's a new currency pair I picked up. I had leverage to pick up a new currency pair due to the fact of Brexit being heavily impacted on the sterling pairs. So I wasn't really trading sterling as much going into the end of 2018. Hence gave me more time to perhaps look at other pairs. So looking at this currency pair, I'm going to step to the weekly for a minute and we'll look at how the week ended last week. So as you can see here, guys, I've kind of got this massive shooting star. Perhaps a Mabozu, but there is a slight wick underneath it. But it is a nice bearish shooting star. It's then also had a nice rejection of a weekly resistance here. So just from looking at the weekly time frame, let me just press that back. As you can see, this weekly resistance acts as a nice level of support. We've had rejections, indecisiveness, then we broke through. We've reached up here again, had a nice false break. We've closed back underneath with an indecisive doji. We've swung back up here again, guys, at the same price of 84.32, a nice key level that price rejects and bounces off. So if I was to step down to my daily time frame, it would be a bit more evident. So we had that day on the 14th of April where we had that clear rejection. This would have been a nice bullish candle, but we then closed back underneath it. And the last 2 days of the week, we then had bearish momentum there. So what was that indicating to myself? We are obviously, what does that indicate? We are currently in an upwards weekly trend, but then we've met a weekly resistance, perhaps stopping any further momentum just yet. So if I was to step down to my 8-hour time frame, now every candle represents 8 hours. I've also had a upwards channel trend line there. So I've had 2 touches on my trend line at the minute. Correction, I've had a 3rd trend line touch there. Rejection, indecisiveness, and now I've had a trend line break. So keeping it quite simple, guys. Trend line break. I am looking for some key levels to be met to the downside. Now, looking at this as a target point, from looking at key levels, it's using your logic and literally looking across, finding certain key levels, guys. So for example, let's put a few in here. Perfect, there's already one there. So as you can see here, guys, meeting up with a point of a trend line, which is a nice key level going across there, where price is rejected or held significantly in the past. This could be one target zone. Another target zone could be these nice swing lows at the bottom here. Nice swing low. We had a couple of dojis within this price zone here. Another key level also matches up with an upwards weekly trend line going across the bottom there. Another resistance area for this currency pair before it wants to perhaps shoot back up to the upside. We've also had, looking at moving averages, guys, the price action is now sitting underneath our blue and red EMA. Whenever we ride underneath it for a significant amount of time, it shows that we're perhaps in a downwards trend. So I'm going to see a moving average also cross, hopefully, within the next succession of 8-hour periods and begin this trend to the downside. So if I was to perhaps show you my short position, my risk reward, entering the trade, putting my stop loss above a key level and some moving averages, so 2 barriers for the price to perhaps break through before my trade becomes invalid, and a nice swing to the downside here of 117 pips as a target around the 82,400 zone. So that is a nice simple setup for Canadian against the yen. Looking at the Euro CAD, now I'm just on the weekly time frame, keeping this quite simple. We're creating swing highs to swing lows. Each time we've swung high in the weekly, it hasn't been a significant high, so we're currently in a downwards trend on a long-term basis. On the weekly time frame, we've had a doji closure at the end of this week. So if I was to step down to the daily time frame in a moment, you clearly show to yourself perhaps why we've had a doji closure. So just from looking at the week's time frame, indecisiveness in the market, perhaps because it's met at some certain resistance or barriers. So literally stepping down to my 4-hour time frame just to see a bit more price action over the past week or so. You can see that within this downwards trend, we currently had the upwards channel to create that swing high, as we were talking about here. But then, as you can see, we've had the trend line break. Eventually, we had a false breakout, but then we had a confirmed break here. And then we've had a descending channel form within an upwards trend as a counter trend. So with your trend lines, at one point, my chart would have looked like this, perhaps. Bear with. Okay, my chart would have looked like this. A nice upwards trend, fantastic. And then if you press play, price would have perhaps eventually broke through. That's the false breakout there. We then had the moving average cross, perhaps to show that the downwards momentum to the downside is inbound very shortly. Doji, then we had the drop, and then we had the succession of drops of shooting stars, great confluences to the downside. Now, and we just get back up to speed with this week. Great. So then we've then had this downwards momentum here. We've had a slowdown and a slight pullback. This just could be due to us breaking through a key level of resistance, which was a trend line break, and also a daily resistance. Obviously, these daily resistances are something that I would have put on from the past. So as every time we've broke through this daily resistance, or no, every time we've come to this price, it's a significant level. So it's either been rejected, as we know, or it breaks through significantly and tests it as a ceiling instead of a floor. So now, to myself, I know that we broke through our daily resistance. We may want to retest it if we can break back to the upside. But from what I can see on this chart here, we've kind of had slowdown in momentum as the daily resistance and the SMA is holding as a level of resistance for the pair to not go any higher. Also, to add to a confluence, that's where I had my trend lines in here. So I had a trend line across the top. Excuse the colors, usually they are white. Just to show that now, if we do break above this, this could be a key level of a target here. But I wouldn't be trading and having a bias to the upside. I've got a bias to the downside due to my weekly time frame. As we said here, we had indecisiveness. So after having all those bull candles, 1 week of bulls, 2 weeks of bulls, we've had 3 weeks where we tried to get up to these highs here, but then had a big rejection of any more bulls in the market. So from knowing from a weekly time frame, we might be out of bulls in the market, buyers. We could perhaps see this trend line and this key level hold up and then perhaps see a nice swing to the downside. You could also form another key. You could also form another confluence with a Fibonacci retracement, and then we can see that we've had a nice pullback to the 50 fib, extension level, which also has a average pullback in regards to the target zone. So a position on this currency pair, once again, I wouldn't be entering until I found a nice candle closure that indicates bearish momentum. At the minute, we've just got currently indecisiveness in the market. If you was to enter a trade right now, you are basically just gambling to see if it is going down or up. Currently, if you put it into perspective, it shows a slowdown in momentum. It's met a couple key levels, as we know. We've met a Fibonacci key level, a daily key level, and a trend line key level. 3 barriers for this to break to the upside. Now, I'm not saying it can't, but it could do. But as we said, we'd be waiting for perhaps some sort of candle formation, an evening star, shooting star, hanging man, perhaps. Obviously, it is a 4-hour time frame, so this could happen. This could happen within the first session on Monday. It could happen in the second session at London session on the Monday. It could perhaps consolidate for the next couple of days. Therefore, we do not want to be in this chart until we have a significant entry point in regards to a confluence. Now, just going to technical analysis with fundamentals in regards to Fibonacci, target would be 62 pips looking at Fibonacci. If you use a daily key level trend trader, you could have an extension down to 1497, or you could perhaps just meet up with your trend line if you use a nice swing trader here. Now, all about analyzing the higher time frames, but ultimately executing on the lower time frames. Okay, you okay? And then looking at New Zealand JPY, as you can see, this is one where I'm not currently looking for an execution just yet. But in this example, you can kind of clearly see that we're currently working within 2 monthly barriers. So my monthly resistance zones are 77.9 and 72.3. So some may say that the chart's moving sideways. It's ranging in between these 2 monthly key resistances. But to myself, I would say we're in a downward trend. Reason being, we've had a nice swing high, and then we've had a swing high again. This swing high wasn't equal to or higher than this swing high, so equal to would have said consolidation perhaps. This could also say a swing high, could also say a higher high, could also say perhaps an upwards trend. Ultimately, I would class this as a downwards trend chart. As you can see, we've had swing lows, swing highs, swing lows, swing highs in a downwards momentum going back all the way to July 2017. You could perhaps say over the recent weeks, going into January 2019, we have been consolidating. But on the weaker time frame, we are in a downwards trend. We've had a bearish engulfing candle here, guys, where the price has broke beneath my weekly resistance turquoise line at 75.1. As you can see, we've had rejections. We had a false break rejection. We had a closure on top of the weekly. We rejected it. We went under it, but we closed above it. Then we had a nice bullish candle rejecting it to the upside. But we eventually had a candle close underneath it this week. So stepping down to my daily time frame, it show you that perhaps that consolidation a bit better with this trend line here with my daily key levels and my weekly key level. So as you can see, we was on the weekly time frame, we was rejecting this weekly, but on the daily, we are now rejecting this level here at 74.83. Now, what you'd want to be seeing on this chart is perhaps a break and a candle closure underneath the daily key level to perhaps see succession targets, to perhaps see swing low targets at the bottom. So now for myself, what I could perhaps do is put a Fibonacci from a nice swing high to perhaps the bottom of this consolidation zone here. And we've had retracements and pullbacks to the 50 fib on that zone there. Perhaps you could see a key level across the D1 extension on Fibonacci. So perhaps here, and it meets up with a nice few key levels here. You could also have this daily key level at the bottom here as a target zone for this currency pair. If we do see that price break underneath, I would perhaps use my daily key levels, not Fibonacci, and it's just because of how choppy this pair is currently. So perhaps I would be looking at these purple zones to be broken, reaching my new purple zone there, which is my daily, eventually looking at this weekly, monthly resistance, I should say, yeah.